Welcome back to Investing Talk Podcast. Today we're diving into MGO Global, ticker symbol MGOL. They're listed on the Nasdaq, and they're making waves in the lifestyle and fashion world, especially by, leveraging that messy brand.
Oh, yeah.
But hold on tight, because MGOL is in the middle of a proposed merger with Heidmar. And the stock has been, it's been a roller coaster. Up 63% one day, down 20% the next.
Wow.
So what's the real story with MGO? We're breaking down all the merger buzz. And we're going to try to figure out if this company is actually worth your investment.
Okay, sounds good.
So first, let's unpack this whole merger mania. The SEC has already given it the green light. So it all comes down to the shareholders. They're voting on February 14th, Valentine's Day.
Wow, Valentine's Day.
Yeah, if they say yes, the new company's going to be on the Nasdaq under a brand new ticker, HMAR, a fresh start. I mean, what do you think about this merger? How do you think it could impact the company's future?
Well, it's really interesting how this merger news is directly tied to the crazy stock swings we've been seeing with MGO. Like you mentioned that 63% surge.
Yeah.
That was February 7th, right after the merger was announced.
Right.
This kind of price action it's textbook speculative trading.
Right.
Traders are just jumping in, trying to predict the next big move and cash in. It's like trying to ride a wave before it crashes, you know?
Yeah. So we've got this merger potentially happening, but we can't forget about the fundamentals. We need to look at MGL's financial health, right? That's what really matters, especially for long-term investors.
Absolutely.
I mean, things are a bit mixed, though. MGL's revenue, it grew a massive 47% in the past year.
Wow.
And they've got a really strong cash position. Their current ratio was 14.13, meaning they've got plenty of liquid assets to cover their debts, short-term debts. We're looking at a hidden gem here. What are your thoughts?
Well, revenue growth and liquidity, those are definitely good signs. But we have to look at the whole picture, right?
Right.
MGO, they're still reporting net losses.
Yeah.
And their earnings per share are actually negative at negative $5.56.
Oh, wow.
So this raises a critical question. Can MGO actually turn revenue growth into actual profit? Even with this merger, investors need to watch this really closely.
You're right. It's so easy to get caught up in all this merger excitement. But those fundamentals are key. So for anyone thinking about, maybe taking a gamble on MGO, let's take a look at some technical analysis. Maybe you can offer some clues.
Okay.
Now, I know charts and indicators, they can seem a little bit intimidating, but stay with us because they can actually give us some really good insights into short-term trading opportunities.
That's true.
Yeah.
Technical analysis, it's like reading footprints.
Uh-huh.
It kind of tells us where the stock has been, and it hints at where it might go for MGO. Well, the signals are a bit mixed. There are some buy signals from moving averages, so that suggests possible upward movement.
Okay.
But there's also a sell signal from the MACD, which is a momentum indicator. It's kind of confusing, right?
Yeah.
We also need to look at support levels, currently at 55.4 cents and 46.6 cents. Those are price points where the stock has historically found buyers.
Okay.
The key takeaway here is technical analysis can be helpful, but it's just one piece of the puzzle. It's not the whole picture.
Right. Okay, so we've got the merger news, we've got MGL's financials, and we've even looked at some technical indicators. Now, let's zoom out a little bit and look at the bigger picture. The stock market as a whole.
Okay.
Because no stock exists in isolation. Understanding the overall economic context is really critical for making those smart investment decisions.
Absolutely. It's like trying to navigate a ship without a compass, right?
Right.
The macroeconomic environment, it creates currents that can either lift your investments or sink them.
Right.
And right now, we're seeing some headwinds. Inflation is still a worry.
Yeah.
And there's a lot of uncertainty around those new tariffs that President Trump has proposed.
Right.
These factors are definitely making investors a bit cautious.
Okay. So adding to that, the major stock market indices, they've been showing some mixed performance lately. The S&P 500 and the Nasdaq, they haven't been stellar.
That's true, especially technology stocks. They've been struggling.
Yeah.
Meanwhile, sectors like healthcare and materials, they've held up well. And they've even made some gains in January, these mixed signals. And the overall uncertainty, it creates headwinds for riskier assets like MGOL, even with all the excitement of this merger.
Okay, so with all this in mind, is MGOL a buy or a sell or what? What's the expert take here?
Well, that's the million-dollar question, isn't it? I think the answer, like most things in investing, is it depends.
Oh, okay.
Yeah.
On what?
So for short-term traders, the ones who can handle the risk, the volatility, they might find some opportunities with MGOL, especially if they can time the market right, use those technical signals we were talking about.
Yeah.
But for long-term investors, I'd say proceed with caution. MGOL's financial health is still a concern, and then you add this unpredictable market on top of that. It's another layer of risk. It's not for the faint of heart.
Right. So for investors who are listening and trying to decide what to do with MGOL, what should they watch for to get a clearer picture of the company's future? Any key dates or events coming up?
Yeah, definitely keep an eye on the upcoming earnings reports. They're expected March 31st.
Okay.
Those will tell us if MGOL can actually turn that revenue growth into actual profit and how this merger might impact their bottom line.
Okay, great. Until then, it's all about managing risk and making smart decisions based on the info we have. Speaking of which, let's talk about MGOL's recent price action and volume. On February 11th, MGOL was all over the place. I mean, fluctuating between 46 cents and 56.15 cents.
Wow.
That's a big swing, wouldn't you say, for one day? And to add to that, it closed at 55.39 cents, down 20.83% from the previous close. What do you make of this? Is it just like typical pre-merger jitters, or is there something more to it?
Well, the high trading volume on February 11th is what really caught my eye. We saw 78.49 million shares change hands, almost double the average.
Wow.
So this tells me there's a lot of speculative trading happening. Investors are just trying to get ahead of that shareholder vote on the merger. It's like a game of musical chairs. Everyone's scrambling for a seat.
Right, right. Speaking of reading the tea leaves, let's look at some key technical indicators for MGOL. First up, moving averages. For those who aren't familiar with moving averages, they're trend lines that smooth out price fluctuation over a specific period. So they help us see if a stock is trending up or down or just going sideways.
Right. And for MGOL, the moving averages are painting a somewhat negative picture. The stock is trading well below its 50-day simple moving average, which is at $1.03. And its 200-day simple moving average is way up at $2.63.
Wow.
These are usually considered bearish signals, which suggests that the stock might keep dropping.
Okay, so moving averages aren't looking too great. But what about other indicators? Anything that might give us some hope?
Well, the Relative Strength Index, or RSI, is actually giving us a slightly more optimistic view. MGOL's RSI is currently around 19.76.
Okay.
So this is what we call oversold territory. An RSI below 30 usually means that the stock has been sold off too much and might be due for a rebound.
So is this a buying opportunity? Should investors rush to grab MGOL shares while they're on sale?
Hold on, an oversold RSI can signal a reversal, but it's not a guarantee. We need to look for confirmation from other indicators and consider the bigger picture.
Right, because as we discussed, MGOL has some headwinds, those weak fundamentals and the uncertain market. Let's move on to another popular indicator, the MACD, which stands for Moving Average Convergence Divergence.
Yeah, the MACD helps us spot changes in momentum and possible trend reversals.
Okay, what's the MACD telling us about MGOL?
Right now, it's giving us a sell signal.
Okay.
The MACD line is below the signal line, and there's no sign of a bullish crossover. So this suggests that the downward momentum might continue in the short term.
Okay, so we got some mixed signals here. Moving averages are bearish, the RSI is oversold, and the MACD is flashing sell. It's enough to make anyone dizzy. What's an investor to do with all this conflicting information?
Yeah, that's the challenge, right? Investing is like solving a puzzle. You need all the pieces to really see the full picture. So let's talk about support and resistance levels. These are like battle lines on a price chart where buyers and sellers clash.
Okay.
For MGOL, we see support around 46 cents, which was the recent low, and resistance near 56.15 cents, the recent high. There's also resistance around 70 cents, which was the closing price before the big drop.
Okay, so if it drops below 46 cents, that could signal further decline. But if it rallies above 56.15 or even 70 cents, that might mean the momentum is shifting.
Exactly. But remember, these are just possible scenarios. Nothing is certain in the stock market.
Of course, we've covered a lot. MGOL's financials, the merger, and even the technical indicators. But we need to kind of step back again and look at the stock market as a whole. MGOL isn't operating in a vacuum.
Right. Think of MGOL as a ship on the ocean of the stock market. Just like a ship can be tossed around by waves, MGOL's performance is affected by overall trends and investor sentiment.
So what kind of currents are we seeing in the market right now?
As we mentioned, inflation is still a big factor. Rising prices are hurting consumers and squeezing corporate profits.
Yeah, and then there's the uncertainty around President Trump's tariffs. These could disrupt global trade and potentially slow down economic growth.
Exactly. And when investors are uncertain or worried about the economy, they tend to play it safe.
Meaning they're less likely to invest in companies like MGOL, which is seen as riskier because of its volatile stock and its financial situation.
Precisely. So even though the merger with Heidmar could be good for MGOL, in the long run, investors have to weigh those potential benefits against the current market headwinds.
It's a balancing act, for sure. So for our listeners trying to figure out what to do with MGOL, what are the key takeaways?
I think first and foremost, remember that investing is about managing risk.
Yeah,
Don't get caught up in the hype of a merger or that fear of missing out FOMO.
right.
Take a step back and really figure out your own risk tolerance and investment goals.
Yeah, you've said it before and it's worth repeating. Don't invest more than you can afford to lose.
Exactly. The market can be unpredictable, and there are no guarantees, especially with a volatile stock like MGOL.
Yeah, and I also think it's important for our listeners to do their own research. Don't just go by headlines or what you hear on podcast. Dig into MGOL's financials, read analyst reports, and truly understand the company, the industry, and the potential impact of this merger.
Yeah, I couldn't agree more. Informed decisions are the best decisions.
So to wrap it up, MGOL is a really interesting case. We've got some potential upside from this merger with Heidmar, but there's also the uncertainty of how that's going to play out and the added risk of this current market environment. So it's all about risk versus reward, isn't it?
Absolutely. And at the end of the day, the decision to buy, sell, or hold MGOL is up to each individual investor.
Yeah. We've given you a lot of information and insights today to help you make that decision. Thanks for joining us on Investing Talk Podcast for this look at MGOL.
It's been a pleasure being here.
Yeah, and one last thought for you. If the Messy brand is truly a global powerhouse, as MGOL believes, how could they use that to overcome some of these financial challenges and navigate this tricky market? That's something to think about as you do your own research. Thanks for listening, and don't forget to subscribe to Investing Type Podcast. Share this episode with your friends, and leave us a comment with your thoughts on MGOL or any other stocks you'd like us to discuss. We'll see you next time.